Hey guys, Disruptor here. We're going to crank out another video today just because there's something that I think we really need to talk about. What's the market doing? Where's it going? What do we need to look at? These are things I've been talking to my friends about a lot on Twitter and in Street Cred Traders, the Discord and group that I'm a part of. We're looking at, at what point in the market do we feel like there's some confidence, right? Like when personally would I go in more cash? Less cash. When would I start investing again, right? Instead of having it set aside and waiting to see what the market does. And so anyway, so I'm going to start this thing. Maybe it's a new series. I don't know. Chart book. Basically, these are charts that I'm collecting that I think are important that I'm looking at on basically a daily basis. And so I think it'd be a good chance for us to see if that's helpful for you. I don't know, but maybe it will be. And let's go ahead and take a look at what I've got going on. Okay, so here I am over in bar chart. This is my chart book watch list. If you don't know, big user of bar chart. Definitely recommend their site and their services, and we can get into some of their strengths as a user. If you guys are ever curious, just drop a question in the chat box or hit me up in the DMs on Twitter. But we'll just jump into this really fast, and I'll jump into my price action view right there. Okay, so the first thing is, when I'm looking at the market and trying to figure out what I'm going to do, I want to see about breadth, right? And let's just say if for any reason, if you're unsure what breadth is, breadth basically means the amount of stocks that are participating in the market, right? And so for instance, if let's say 30% of stocks are above their 200-day average, right? That would probably be relatively poor breadth, right? Not very many stocks are really doing that well. But if you got something like 60, it's gangbusters, right? And so that's important when we talk about breadth, like understanding, what's performing, what's working, and what isn't. So just hope that made sense. So anyway, so here we are. We're looking at the percent of stocks above a 200-day average, right? And this is something I've been looking at for a while. And so here we are. I have a trend line here connecting my highs. These are percentages, just basically running up to 100. So it's not price, but I still believe that trend lines work here. And we're working our way up there. This line right here is 37, around 37%. I truly believe that 37% is a significant risk-off level. If I tried to jump out, maybe we can see it here. It just connects nicely on a couple of points. And then if I went into 5 years, you can see it's just, there's a pivot point, pivot point. Basically, we're showing here it is acting as resistance, here it is acting as support, here it is acting as resistance. And what that means is that this is a line of significance. So that's why I've been looking at this percentage here. We're just not getting above it. For me, that's a little worrisome. So I'm looking at this carefully, trying to see what the market wants to do at this moment. The other thing I want to look at here next is this is the percent of stocks above 50-day. You'll notice this one looks incredibly different, right? Here we've got colorful bands. It looks like we're throwing a bit of a party here. And basically what this is, this green line up here, that's a level where I feel like, man, let's make some money. There's a thin green dotted line that's definitely feeling confident. This yellow line, caution. Pink is slow up, and red here is just kind of a moment where I'm like, for instance, last time we were in this was, during the COVID crash. And so just those are times when I just think it's really concerning. And so here we are. I've got my trend line again working. We shot down. We are definitely in the caution zone. There's no doubt about that. And I might even redraw this line here as caution and maybe move this one to pink. I just am really debating on that. But basically, my point being that we're not in a place where I feel confident. Always with RSI, I'm looking at ranges. And right here, this is my 60. I do have my RSI set up differently where it's 40 and 60 instead of 30 and 70, and that's because I follow, and it's Andrew Cardwell. If you were watching a video of mine, couldn't remember the name, Andrew Cardwell, who's determined these RSI ranges, and they work really well. Basically, if 60 acts as resistance and I'm getting below 40, that is bearish, and when 40 acts as support, like here, things are quite bullish, and we've seen this play out over and over again. So that's one I'm looking at. So breadth, the number of stocks that are participating, right? So when we talk about that, right, we're looking at those stocks that are participating and running and hoping that that's going to turn us into something that's going to be profitable, right? So that's why we keep looking at that. So let's dive back in. I've got just a couple more charts I want to show you, and we'll see what you think. So here we are. We're back at the charts. The next one's SPY, S&P 500. This is S&P 500 ETF. And what we have here, in my opinion, is largely what looks worrisomely like a head and shoulders pattern. And I've been talking about this on social media. Basically, we have our shoulder, a high, comes down, a higher high, right, comes down to roughly the same point, and then comes up again to around the same area, and then comes back down. Now, we call this the neckline. So basically, this is shoulder, head, shoulder. And this is the neckline, basically the point where this touches, and I could probably make an ascending line there instead of this flat line, but I'm just being really cautious with this one. And so if it comes back down below this, then we could enter a markdown phase, and a markdown phase would be just like this markup phase where it's just glory, glory, hallelujah, big uptrends. This would be, oh my God, downtrends. So definitely something I'm watching. Now, looking at the actual S&P 500, this is SPX. You can see same thing, just one is an ETF and one is the other one. But, I just want to make sure you see it. Now, QQQ, this is the NASDAQ. This is tech heavy. And again, here we didn't even make the same high on that right shoulder, if that is in fact what it is. And you can see I did connect my my neckline here pretty specifically because I think that if something were to play out, it could play out here first, and that would be worrisome. So anyway, I'm hoping that was helpful. I'm hoping that seeing the way I'm looking at me building this chart book and going through these on a regular basis, hope that's helpful, and cheers, y'all.